What's up, guys? It's Stas here. So in this video, we're going to be doing an M1 Finance portfolio update, going over one of my long-term portfolios here in the stock market. I want to briefly go over with you guys what stocks and what ETFs I own in this portfolio, and mainly I want to share with you guys what changes I've made from the previous update video. I've actually bought 2 new ETFs. I sold a little bit of one position, so I want to go over that. And in general here, where my head is at and kind of what I'm looking to buy moving forward. A lot to talk about in this video, and if you guys want to check out the previous update videos to this portfolio, check out the playlist down below in the description box. I actually started this from $0 back in July of 2019 for the YouTube channel, so if you want to see where it started and how it got all the way to where it is today, that is linked right down below in the description box. So let's get into this video, and if you guys find value, as always, hit that like button and consider subscribing to the channel, and let's just talk. What has been going on here in my M1 Finance portfolio? Well, a lot's been going on. I sold out of something, I bought 2 new positions, and last update video, I believe it was around $5,700, and you guys can see now it's right around $6,500, so the market has been doing well, and I've also added money into the portfolio, so let's see how it's been doing. This past month, it's up around $500. That's around an 8.6% return, a money-weighted average return. I've made around $11 in dividends. 467 is for market gains. This past week alone, guys, it's gone up $230, up $5 from dividends, up about $230 from market gains, and overall in the quarter, it's up $700, $660 from market gain, and about $34 from earned dividends. And this past year, I believe this is, exactly from 1 year ago, it's up about $500, 21% money-weighted return, and all-time it's up about 25% money-weighted return, 516%, and obviously, guys, when you're looking at that money-weighted return, it's not really accurate. I mean, 24% is, and $500 is about a 24% gain on 6,500. That doesn't make sense, right? So where I like to look at for my actual return, a closer version of my return, as I go to holdings, and here I see unrealized gain of around $660, which is around 11%. So overall, I mean, my gains are around 11% on this portfolio since I started. And again, it's because, if you go to holdings here, it's different because this on the main screen, the return you're seeing here on M1 Finance is a money-weighted average return. So it's actually calculated a bit differently, but that's a whole different topic there. And either way, the portfolio here has been doing decent, $6,500, and my main position right now and the top couple here are DGRO, DGRO. This is a dividend growth ETF. It's around 10% of my portfolio, up around 8% on this overall. Starbucks is my second position here, and I've been talking a lot about Starbucks, guys. I've been calling it out from the low 70s, mid 70s. I've been saying, hey, Starbucks is a decent value here in my opinion. It pays a dividend, and I think as the economy here in the U.S. gets back to normal, Starbucks is one of those companies that's going to benefit a lot. And since I called it out, and you guys can see right here, I mean, my average cost is around $75 in this account. It's up to $85. So I've gained $10 per share price appreciation here on Starbucks, and you'll see a little bit as we go into my activity. I also gained a decent little dividend. I think it was around $2 of a dividend or something, which, hey, I'll take it, guys. I'll take it and reinvest it right back into my portfolio. So Starbucks, I'm up about $55 on, roughly 20% there. Microsoft is the third position here, up about $100, roughly 45%. J&J is that fourth position, followed by Disney. And these are all the top because I believe these blue chip companies are not going anywhere. I think they're going to be the rock in the heart of my portfolio, and that's why I'm making them about 6% each. Even MasterCard and Amazon, right? All of these are the heaviest weighted because I really believe in these companies moving forward, and I want them as my core, right? 6% in Amazon. I'm up over 100% their money weighted average. MasterCard, up around 50%. That's roughly 6% of my portfolio. Disney's around 6% of my portfolio. Same here with J&J. It's supposed to be around 5%, but now it's at about 6.3%. So I'm comfortable having a chunk of my money in these 5-6 names that you guys see here at the top, as they are about 40 to 50% of my portfolio. That's the truth, these top couple of names. Then under Amazon, you have Realty Income, followed by McDonald's, followed by Pepsi. These are more blue chip companies. Obviously, most of my companies, if not all of them, are blue chip. I'd say most of them because some maybe aren't blue chip, I guess. Something like, I don't know if AbbVie is considered blue chip or Facebook. I guess they are. We'll argue that at a different time, but most of these are very strong, stable companies that don't have much risk and aren't going anywhere. Quite honestly, all of my companies are that, I believe at least, and some of them have high growth, like Amazon, Microsoft, PayPal, and so forth, Facebook, but some of them are slower growing and they pay nice dividends, like AbbVie, Pepsi, McDonald's, even Realty Income, which is a monthly paying REIT, a real estate investment trust. So I have some money there. I like these companies. And then SPHD, if you guys remember, this used to be around 10% of my portfolio. I trimmed it down to 5%, and we'll go into that here in a second. Under that, we have VEA, which is around 4% of my portfolio, doing well on that. That's a developed markets ETF that does not include United States companies, so I really, really like that. And then under that, we have Altria, followed by Facebook, followed by PayPal. And the reason why Facebook and PayPal have fallen so underweight at this point, guys, is because they've been doing so well for me. I bought in at low prices. Facebook, my average cost is around $209, and on PayPal, my average cost is around $108. So I'm up so much on these positions that I haven't added to them. I've been pretty much just letting them ride. So they're just not. They're kind of falling behind because I don't know if I should buy here, even though both of them are a bit frothy in valuation. And I might just average in just to bring them up in my portfolio. We'll see what ends up happening. But under that, I have Duke, followed by AT&T, followed by Procter & Gamble. 3 more stable dividend churning companies. Don't have much growth, but to put some money in there, I think it's a good idea as they are safe and stable, at least for my personal analysis, right? And always do your own due diligence, your own research, guys. Very, very important. And now, guys, let's go over the final 2 holdings that I added into this portfolio. And you guys might be saying, Stas, you bought these a bit at the top. You bought these a bit too late. And guys, the truth is, in a long-term portfolio, sometimes you have to average in and dollar cost average. That's kind of the name of the game. So I don't care if I buy in at a peak, quote unquote, even though it might not be the peak, but I don't care if I do, right? Because I want to add money and I just want to get my money working for myself. So I bought into ARK, 2 ARK Invest ETFs. I bought into ARKK. I bought in about $150 worth into that one. This is the ARK Innovation ETF, probably the most popular one that they have. They own companies such as Tesla, Square, many other companies in that fund. And I also bought into ARKQ, which is an ARK Industrial Innovation ETF. This is more for autonomous driving, autonomous robotics, and so forth. This is a play on that side of things. So these 2 ETFs, yeah, they are at the peak in terms of their charts, but it doesn't mean that they're going to crash because of that. Who knows? From $90 per share, I believe these ETFs are. Let me double check. Right around 90 for ARK ARKK, this could shoot up to 120 before it pulls down, which is why I don't like, I look at charts when I long-term invest as well, but I don't solely base my decision on charts, and that's because I understand that I have a long-term time frame here. So I'm adding a little bit into ARKK, and I plan on averaging more over the next couple of months as I continue to build up this portfolio, and that goes with ARKQ as well. You guys can see I gave ARKK around a 4% goal of my position, or portfolio rather, and ARKQ around a 3% goal of my portfolio. So ARK's going to have around 6 to 7% of my portfolio eventually, and I believe that is a decent amount considering the amount of growth and innovation coming from these different companies in these ETFs. And SPHD, like I said, I sold some of it, and we'll go to my activity now so you can see. If I go here to trading and do trading only, you guys can see on this day I sold about $230 of SPHD. And if you guys sell out of a stock, an ETF in the stock market, a lot of people are like, you should be bummed out for taking a loss. And I took a little loss there on SPHD. I lost money, but the truth is, when it comes to taxes, you can write off your loss against your gains. So in essence, it's kind of a win-win scenario. You open up capital, you free up money in a losing position, and you can write it off on your taxes against your gains, right? And of course, talk to a CPA, but you can do that pretty much. So I took money out of this low volatility ETF. I still want some exposure there for the dividends, but I took 5% of my portfolio out, and then I flooded it into some growth ETFs. And you guys can see I've been buying across a lot of stocks here: Microsoft, ARK, AbbVie, McDonald's, Facebook, ARKQ. I bought Pepsi, Amazon, MasterCard, Starbucks. So I had 10 buys on this specific day. And overall, I've been doing a lot of just dollar cost averaging. Like I said, on August 12th, I bought Amazon, AbbVie, Pepsi, Microsoft, VEA. On August 17th, I bought VEA and Johnson & Johnson. And literally just yesterday, guys, 4 more buys of $100. Bought some Facebook, bought some DGrow, and I bought some more of the ARK Invest ETF. So that's the name of the game when it comes down to long-term investing, guys. You have to be very diligent, and you just have to average in over time. And especially with this new Fed policy, they're doing 5 years of pretty much low interest rate environment. That's a very good sign for the stock market. I want to get more and more money into it. And when it comes to dividends, guys, this is a portfolio that pays out some good dividends some months here. We got so far in August from AT&T about $3, from MasterCard about 30 cents, AbbVie I got about $2.30, Realty Income $1.20, Procter & Gamble about 90 cents here, and $1.80 here from Starbucks as well. So overall, we've made about $6, $7, $8, $9 from dividends, whatever that math is. And again, like I said earlier, I just reinvest this into the portfolio. I'm not taking this out as income. I'm just reinvesting it in to get the effect of compound interest over time. So that's pretty much what I've been up to, guys, what the portfolio's been doing. Those are some dividend payments, what I've been buying, what I've been selling, what I've done overall. And I'd love to know what you guys are doing down below in the comment section. Please let me know. And yeah, I just wanted to get some money out of SPHD, put more into a growth-oriented ETF, 2 growth-oriented ETFs, and I feel like that just gives my portfolio a lot more balance. So let me know what you guys think down below in the comment section. Feel free to hit that like button if you guys liked the video. I'm sure you did, and consider subscribing. And also, if you guys want to join M1 Finance, I know it's not a lot, but you could get $10 if you sign up using my link, and I believe depositing any amount of money. So if you guys do want a brokerage for long-term investment, investing. I mean, I love M1. I have really no complaints about it. Check out that link, deposit any amount, and you get $10 free to start investing. And don't forget to check the playlist out to see where this portfolio started and how it got to where it is today. I'll catch you all in the next video. Thanks for watching as always. Peace out.